Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Monday, December 21st, 2020. We have a bit of a sell-off today. We haven't seen one like this in a while. We're down over 1% on pretty much all the major indices. The Dow is the slight outperformer, but you know that I'm not a big fan of the Dow because it's not representative of much. But we're seeing some profit taking, and that's really all it is right now. Is profit taking. We've had tremendous, stellar rallies in the market for weeks, months now. It's normal to see a little bit of backing off, particularly when you see some catalysts to sell. They're relatively minor. I had a reporter ask me today, was this Tesla related? And only peripherally, because Tesla is basically trading where it was before the closing print on Friday and more or less where it was after the closing print on Friday. So, because it shot up from about 660 range to 695, then was trading sort of in the 660 to 670 range afterwards. I assume that certain people sold into the print and we're buying it back in the aftermarket and are buying it back now. I'm not gonna venture a guess with this stock because it's such a crazy animal, but it is the logical trade there that knowing that it was going to have a big imbalance into the close, that it would have a little bit of a sell-off. But having done some math on this, this accounts for about 2 to 3 points on SPX today. Now that it's an SPX component, there's still another 50 or so to account for. And the reasons, I think there's several. First of all, it is the Monday after a quarterly expiration, and we rallied sharply into that quarterly expiration. I think a lot of that was there were bets that culminated in the quarterly expiration and the quarterly rebalance that have since faded from the scene. They're behind us. Those price moves tended to be, I think, on the bullish side, despite the fact that there was a lot of stock for sale in the S&P 500 names, other than Tesla. The news out of the UK stinks, and that's, I think, where most of the fall we saw during most of the fall in the overnight futures were during European hours, not Asian hours. And the thought of a new strain of virus that may be more contagious, they're not really sure if the vaccine will work on this or not. Definitely weighed on sentiment. Also, by the way, out of the UK, Brexit is still out there. How they're going to deal with it, and obviously this is not helpful news if you're getting a new spike in a more virulent strain of the virus, or at least a more contagious strain of the virus. Neither of that is good. Also, we got the news over the weekend that the government finally hammered out a stimulus bill. You've heard me say this phrase a million times: buy the rumor, sell the news. And I think that's kind of playing into that to a certain extent as well. The stimulus deal that they reached is good, not great. It will help the economy. It will put money in people's pockets. Some of that money will undoubtedly flow into the stock market because they're going to be handing out $600 checks to people, more or less whether they need them or not. And so I think a certain amount of that money will flow into the stock market, just as I believe a certain amount of the $1,200 checks flowed into the stock market before. But now in the argument, as the news rolls out, we don't really know what's in this, by the way, other than the headline stuff. So the thought is, what kind of nasty stuff is hiding in there? Number one. And number two, okay, this is very good, and there's a lot of people who need a lot of help, and I'm really sympathetic toward them. But this is in many ways a Band-Aid, not a vaccine, to put it in COVID terms. It's helpful, but not the end-all, be-all. And I think that plays into it. Remember also, you have a short week, and crazy things can happen in short weeks, and I think you do get some of that effect. There have been some stories of people being maybe a bit more aggressive than normal at taking some profits into year-end, which normally you want to sell your losers into year-end. Sorry, you don't necessarily want to, but that's a tax strategy that is commonly done, is you sell your losers if you have a lot of winners if you've had a lot of winners, and presumably people do have winners this year, it's a common tax strategy to sell your losing positions to offset some of those gains. But I think there have been some articles that there are people trying to sell ahead of those gains because they do fear that there may be some more taxes coming down from the Biden administration. And certainly depending on how the Senate races in Georgia turn out, we won't really know that. We won't know that until after the calendar turns. So some people may be selling some winners into this as well. There's any number of things going on. Bottom line is, markets go down. They don't always go up, and they don't always go up euphorically. It's easy to start to think that way, considering what we've seen over the last weeks, days, months. We're seeing some, as I'm doing this, we're seeing some buy the dip activity. That's to be expected in this market. It's been a profitable strategy for the most part. Let's see where it goes. Don't read too much into this today, though. I mean, I think it's just some normal steam coming out of market letting off some steam. Have a good one, everybody. Take care. Bye-bye.